Well, if it isn't someone looking to dip their toes into the world of real estate investing. Let us tell you, young buck, it's a wild ride out there, but with a bit of know-how and some common sense, you can ride that wave to financial success. You see, real estate investing can be a bit like a box of chocolates. You never know what you're going to get. But, with years of experience in the industry, let us tell you, there are definitely some sweet treats out there waiting for you. That's why it's important to consider all the factors before diving in headfirst. From your personal finances to your investing goals, every decision counts. And, let's not forget about the different types of investments available. In this video, we're going to explore all the opportunities and risks involved in the world of property investments. Smash that like button and let's get right into the video. Why invest? You're probably wondering why so many people love to invest in real estate. Well, you're about to find out today. Cash is king. Cash flow, the sweet sound of money in your pocket. That's what real estate investing is all about, my friend. You see, when you invest in property, you have the potential to generate net income after all expenses have been paid. We call that cash flow, and it's a beautiful thing. The best part? Cash flow can actually get stronger over time. As you pay down your mortgage and build up equity in your property, your cash flow can increase, giving you even more money to play with. Now, that's what I call a win-win situation. But, don't be fooled, cash flow isn't always guaranteed. It's important to do your due diligence and crunch the numbers before making any investments. Make sure you factor in all the expenses, including mortgage payments and operating costs, to get an accurate picture of your potential cash flow. Tax breaks. The sweet sound of saving money at tax time. That's another big benefit of real estate investing, my friend. You see, as a property owner, you can take advantage of numerous tax breaks and deductions that can keep more money in your pocket. First off, you can deduct the reasonable costs of owning, operating, and managing your property. From maintenance expenses to property taxes, all those costs can add up and be deducted at tax time. But wait, there's more. The cost of buying and improving your investment property can be depreciated over its useful life, which is 27.5 years for residential properties and 39 years for commercial properties. That means decades of deductions that can help lower your taxed income and keep more money in your bank account. And here's another tax perk: you may be able to defer capital gains by using a 1031 exchange. That means you can sell one investment property and reinvest the proceeds into another property without paying capital gains taxes. Appreciation. Appreciation, the cherry on top of the real estate investment industry. You see, my friend, when you invest in property, you have the potential to make money in a variety of ways, and appreciation is one of them. Over time, real estate values tend to increase, which means that the property you invested in could be worth even more when it's time to sell. That's right, you could potentially turn a tidy profit on your investment. And, as if that wasn't sweet enough, rental income tends to increase over time as well, which means even higher cash flow for you. But, it's important to note that not all properties appreciate at the same rate, and some may even lose value over time. That's why it's important to do your due diligence and invest in properties with growth potential. You'll also want to keep an eye on market fluctuations, as they can have a big impact on the value of your property. Inflation hedge. The inflation hedge, another great benefit of real estate investment. You see, as the economy grows and GDP increases, the demand for real estate tends to rise as well. And when demand for real estate rises, so do rental prices, which can result in higher capital values for you. This means that real estate can be a great way to protect your capital against the ravages of inflation. By passing some of the inflationary pressure onto tenants through increased rental prices and incorporating some of the inflationary pressure into capital appreciation, real estate helps to maintain your buying power over time. Of course, it's important to remember that not all properties are created equal. Location, market trends, and other factors can all play a role in how well your investment performs as an inflation hedge. Build wealth. You see, as you make mortgage payments on your property, you build equity, a valuable asset that becomes part of your net worth. And as your equity grows, you gain the leverage to buy even more properties and increase your cash flow and wealth even further. Think of it like a snowball rolling down a hill. As it gains momentum and grows in size, it becomes more powerful and can roll even faster. The same is true for real estate investment. As you build equity and expand your portfolio, you become more and more powerful in the world of real estate. But of course, building equity takes time and effort. You'll need to make smart investments, carefully manage your properties, and always be on the lookout for new opportunities. The risks. Investing in real estate isn't all sunshine. Investing without the proper research will cost you everything. These are the types of risks that you should watch out for. Very unpredictable. The real estate market can be quite the wild ride. Just like a roller coaster, it can have its ups and downs, and sometimes unexpected twists and turns. While real estate has proven resilient during the COVID-19 pandemic and reached all-time highs in many locations, we can't forget the lessons learned from the 2008 Great Recession. Many investors at that time believed that the real estate market could only move in one direction, up. But we all know how that turned out. The truth is, the real estate market is unpredictable, and even the most seasoned investors can get caught off guard. Factors like supply and demand, the economy, demographics, interest rates, government policies, and unforeseen events can all impact real estate trends and prices. Structural integrity. While real estate investing can bring in huge profits, it also comes with its share of headaches. One of the biggest risks is hidden structural problems, like moldy walls or foundation damages that can sneak up on you and cost you a fortune in repairs. To avoid this costly mistake, you'll want to do your due diligence and only invest in properties from reputable developers with a solid track record. And, to be extra safe, consider hiring a professional appraiser to evaluate the property before you make an offer. Remember, it's better to be safe than sorry when it comes to structural issues. Vacant. The dreaded vacant sign. It's the last thing any real estate investor wants to see. Unfortunately, vacancies are a reality that even the most experienced investors must face. To combat this risk, you can do several things. Consider offering competitive rental rates that are attractive to potential tenants. Get creative with your marketing strategies and try listing your property on social media. And if all else fails, enlist the help of a reliable real estate agent who can help you navigate through the stormy waters of vacancies. Tenants. They can make or break a real estate investment. Some are dream renters who pay their rent on time, keep the property clean, and never cause any trouble. Others, well, let's just say they're the stuff of nightmares. Late rent payments, property damage, and endless complaints are just a few of the headaches that come with bad tenants. To avoid these issues, it's crucial to screen tenants thoroughly before allowing them to sign a lease. Don't just accept the first applicant who comes along. Take the time to check their rental history, credit score, and employment status. Trust me, a little extra effort on the front end can save you a whole lot of hassle in the long run. Negative flow. The bane of many a property investor, negative cash flow. It's a situation that arises when your expenses are greater than your rental income. And trust me, no one wants to be in that kind of cash crunch. So, before you take the plunge and invest in a property, make sure you've done your research and analysis, and you know exactly what you're getting into. Crunch the numbers and calculate the potential costs and rental income. That way, you can avoid the pitfalls of negative cash flow and keep your finances in the green. That's all, folks. Hope you guys learned the important stuff when it comes to investing in real estate. It's not all sunshine, there are big risks involved too. Hit that subscribe button if you haven't already, and we'll see you guys next time.